What's up, everybody? Today we're going to be talking about Irobot and whether or not this is a good time to buy the stock. So today, Irobot reported earnings, and like a lot of stocks, even though they killed earnings, the stock was still down huge. And so we've seen this with a couple stocks over the past week or two, like Amazon, Apple. Some of these companies will report great earnings, but the stock continues to go down. So here we can see that for Q4 2020, iRobot posted revenues of $300 million, up 58% from a year ago. Okay, that's huge. And Wall Street was expecting them to do 264 million. So a nice beat there. Then we have profits of 41 cents a share, and Wall Street was expecting 9 cents a share. So huge beat. But if we look at the stock price today, so it ended up only being down a little over 7%, but at one point today it was down over 14%. So is this a good time to buy the stock? Well, if we look at the past year or two, we could see that there's been lots of volatility because at this point in January of 2021, we can see that there was a short squeeze, and I think the stock went to like $180 a share at least. And I remember back then because I own, let's see, we can see December of 2020, I bought 20 shares at $74 a share. So it was a lot cheaper back then. Then a little over a month later, it skyrocketed to, I sold out at $147 a share. So I pretty much doubled my money with that. I was super happy with that. And now we can see stock was hovering around the $120 range. And then today after hours, it's down to about $96 a share. Okay. So what we can see here is that here is the last 3 or 4 years of iRobot and the PE ratio. So we could see that sometimes it's been as high as 60, even it comes down to 50 a little bit, but right now it's at iRobot's trading at a 16 trailing PE. Okay. And this is one of the lowest it's been in a long time. So from that metric, it looks like a good idea. Okay. Now, one thing I really like to pay attention to when I'm investing in a company is whether or not they are a leader in that industry and if that industry is growing. So I think a lot of people can agree that the industry of robot vacuum cleaners, and they even make they're planning to make a robot to cut your grass. Okay, so they have that, and they also have a mopping robot. Okay, so we have that. We have the fact that the industry is growing, and then we also have the fact that you can see here their market share is huge. So here's all the competitors in the space, and in 2020, iRobot had 46% of the market. So that's a super good sign for this company. Now, if we keep going, we can see revenue was up big, EPS was up. So the other thing that hurt this stock last year was Trump's tariffs, because that really put a big dent into their profitability. But it said they're getting I forgot how much, they're getting back like $50 million or something from paying those tariffs. So that should not be a problem as much going forward. Okay. But if we look at the 5-year stock chart, we can see that even though that their revenue and income has been going up over the past couple of years, the stock price does not follow. So if we look right here, we can see the other thing that confuses me is look, when you look at the earnings, it goes from 2019 to 2021. So I'm kind of confused because these are actually 2020 earnings. But anyways, the revenue and income is growing, but the stock chart does not follow. So it goes up and down, up and down. In the end of 2019, this is kind of when the tariffs hit. And so that's what put the stock price down. But right now at $96 a share, I feel like it's a little bit undervalued, but it definitely could go down more. If it was to go down maybe to let's say, if it went to $80 or $85 a share, I think it'd be a much better place to buy it. And then over the next year or two, I could definitely see this stock going to $130, $140 a share. Okay. And as I was reading the articles on here on Seeking Alpha, everybody is pretty much bullish on this stock. See, all the articles are bullish. So there's only good things to say about them. And I mean, if we look at, let's see, let's keep going. We can see they're coming out with new products. Their AI and their software keeps expanding, keeps growing and getting better. And their robots are getting smarter. So the other cool thing here is we could see that a lot of customers are shifting towards higher end products. So they're buying the more expensive products. So overall, I'd say great company. Okay, they're a leader in the space. They're in an industry that's growing. They are innovating their products, and the stock price is, it's down a lot from where it was from that 130 mark, but I mean, I feel like it can definitely go lower. So if it comes down to $80 a share, then it's probably definitely a buy. Right now, I mean, if you're willing to hold maybe 6 months, then I feel like $96 a share is not too bad. But I'm gonna wait for it to go down a little bit more, and then I'll pick up some shares. So let me know what you guys think, and if anybody can tell me about why they skipped 2020 for the income thing here, let me know about that too. Thanks for watching. See you in the next video.